So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I'm joined today by Angelo Christian. Angelo is an investor, entrepreneur, and author. He is known as one of the top producing loan originators in the country. As the CEO of Christian Financial, Angelo has helped tens of thousands of people with his influential coaching, real estate university, wealth management, and mortgage banking. In addition, Angelo has authored such sought-after books as King of Real Estate and 10 Habits of Highly Successful Loan Originators. He has been featured in Bloomberg, CNN, Good Morning America, Great Day Houston, Houston Chronicles, Business Insider, and numerous podcasts. Angelo, welcome to the show.
Man, I love that intro, man. I wish I could do them that good. Thank you, Jonathan, for having me.
Absolutely. A lot to get to today. Very excited. We had a really awesome off-camera conversation about a deal that I have that I've talked about on the podcast before. But before we kind of get to all that and get to all your awesome insight, kind of take us back to the beginning. You know, were you always in lending, or what kind of led you to this space?
Yeah, I mean, so my background, I went to school for finance and economics. That was my education. And I back before I got into lending, it wasn't like I had a dream to be a lender. When I was going to school, my dream at that time was to go work for Goldman Sachs and Wall Street, and start a private equity fund. But I didn't take that course. I met my wife and I fell in love with her, and she didn't want anything to do with New York. And so she wanted to stay in Texas. And then I ran into an old friend I hadn't seen in a really long time. He was in the mortgage industry and he was doing extremely successful. And I was in school still studying for private equity. And he introduced me to it. And I came by, the mortgage company, and I was just blown away with the model. They had over 200 locations and they were doing billions in lending. And I just fell in love with how the whole process works, from the securitization, the secondary market, the origination, and obviously how you're helping people to accomplish their financial goal, given them the capital, being a capital provider. And then obviously the economic opportunity that it offered. I grew up very poor. And so I never got to taste wealth, see what that was like. So when I saw the type of income that he was making, it was also very attractive to me, because I lived, on the streets for a lot of my life. So coupled with all that, I dived right into it. I started working for that same company, learned the business. That company ended up imploding with the crash in 2008. But it led me to start my company. And I took their playbook, and then that model to build what I have today, with a loan origination nationwide commercial residential platform. So the only thing that, and kind of what we were talking about earlier, where we really took what they did as the framework, but then made it much more innovative with, today, with what's going on. Because I made it through the crash, and I'll say I was a victim of it, but I learned a lot from it. And one of the things that it's taught me, like a lot of successful companies that make it, is to be diversified. You can't just do refinances. You just can't do FHA. You have to have all different types of loan products in your tool belt. You and I just had a conversation about SBA and FHA construction loans. How many lenders can you have that conversation with and then turn around and then give them a first lien HELOC on their primary residence, or give their cousin a VA loan? there's not many lenders that can offer that all under one roof. So in times like this, when you see interest rates jump 2 points in 6 months and the Fed talking about raising rates even higher, you want to be with a lender, be positioned with somebody that's an expert that can offer you all these different products. I was dealing with a client before I came on the show, and he's doing a hard money fix and flip on a commercial real estate deal in Virginia, and his other lender fell through, can't get the deal done. He's calling me, and I'm like, well, hey, did you look at, you have $1 million of free and clear property. Why aren't you taking any cash out on this to buy this deal? If you're short on funds and you only have 10% down, why aren't you taking any money out on these properties? Your other lender didn't present this to you? And like, so we're helping him to cross collateralize his other properties so he can purchase this deal, because the property is worth like $3 million that he wants to buy. So it's just, you want to be with somebody that really, really knows their stuff. We have awesome reviews. I encourage you guys after the show, look us up online. If you Google us, we have a 4.8 rating on Google with over 500 happy customers. So I let my customers speak the truth in what they say. And so we work really hard to serve our clients, and we take really pride in what we do.
Awesome. I love that. And you really made a great point when you said, having a lender that has the ability to do so many different types of loans, because, like most things in this industry, not everything is really rinse and repeat, right? You have to get creative. And as we're facing, some more economic uncertainty, that's becoming more and more true. So I guess, why is it then that lenders aren't providing all these various types of loans?
I think that it's, so the thing is that it's very difficult from the training perspective. It's probably one of the hardest things is getting people trained up on it. And that is taking me a lot of time. So our model, we bring in people, usually entry level, fresh out of college, teach them the business, and they work with a senior lender for 2 years before they're ever allowed to be a loan officer. They have to work as an assistant, as an apprentice, to understand how we do it, because we're quoting, it could be 4 different products with 3 different platforms to one person, and so you're working in several systems, different softwares at the same time. So it can be very cumbersome on the back end. On the front end, it looks great, like, hey, for the marketing side, but on the back end, it can be, if you don't know what you're doing. The other thing is that I think that a lot of companies, like, for example, just look at a big bank like Chase or Wells Fargo. They're doing trillions in business. We're doing, about 8 billion in lending. So this works for our size of a business, because we're considered a small to mid cap, company. So if we were a Wells Fargo, obviously this wouldn't work because it's just the volume is too massive. So for very big players, it doesn't even make sense. And so there are a few smaller mid cap companies that have done this, and they've done it very well. It's just, there's a lot of infrastructure and logistical things that you have to think about. And then obviously training the staff has been, because for example, our loan processors are processing hard money loans and conventional loans side by side, and getting someone trained to understand both products is usually very difficult. Because they're like, well, how come on this loan you didn't verify income, and this loan you verified income but not assets, and this one you need tax returns, and it gets very, to a lot of people that it's mind-boggling. So I think if that answers your question, so.
No, absolutely. And that makes perfect sense. You've got to have, the originators have to have that education, understand all the different types of loans, which, like you mentioned, takes a lot of time because they all work differently, and, there's different applications to all of it. So on that side, let's, I guess, start with kind of commercial. What are some things that you're seeing now, kind of keep an eye on as things are changing from a loan perspective?
Well, right. It's a great question. So what I'm seeing a lot of right now is on the commercial side. So during COVID, the height of COVID, commercial kind of died off, right? I mean, nobody really wanted to be caught with a commercial loan. Now commercial, in my opinion, as as COVID is kind of delineating, going away, commercial is coming back. I'm seeing loan requests like I did before, prior to COVID, for, like I said before we got on the recording, $50 million hospital, 200 million construction in Miami for a mixed use. I mean, and you see investors stepping up, issuing commitments and wanting to fund these. So it looks promising, because you have the capital providers that are willing to stand by, partner up with the sponsor. You've seen a lot of ground up construction on multifamily. That building behind us is our office, and during COVID, it was 80% empty, and now it's 100% full again. So I'm seeing more people coming back. Hospitality, nobody wanted to do a hotel loan or hospitality during COVID. That's starting to come back now. The SBA has been a great advocate of helping the restaurateurs and the hotels get through this. So we're doing a lot of SBA loans, writing a lot of 504, 7A loans. So I think that that's there. The concern that, and I don't think it's I was calling that the Fed was going to raise rates. If you go back on my podcast last year, I was telling everybody, hey, be ready, because the climate that we're in right now, at 3% 30-year fix, is not going to last forever. It's going to go away because they have to raise rates, because home prices can't rise 20% a year. It's not going to sustain. And so I think that at some point, the Fed had to do what they had to do, and the rates will probably go up. I wouldn't be surprised if they went up another point. But I don't see them going over that, because you'll start to run into other major economic issues if you see 30-year fixes get into the 8 or 9% handle. So I think that will pass on the commercial investment, but it also lead to one of the biggest refinance booms again in the future. And investors are still going to step up to play, like you're still doing deals. People are still wanting to do deals. Our phone's ringing off the hook. Now, there are certain segments of the market where I've seen that have gotten somewhat squeezed. We've seen loan cancellations come in on the first-time buyer side. The millennials, they're getting squeezed out right now because, you know what, they can't afford a 5.5% mortgage rate right now. If they're on a tight salary. So that market, there's going to be some of these markets, I think, that are going to get squeezed out. But at the same time, what our argument to first-time buyers is that, look, your rent's also going up. It's not like rents are flat. Rents are increasing too. So you're either going to have to buy or do something. So at least build equity. So I think, it's just, you have to, I always say be cautiously optimistic. You can't close your eyes and think that everything's going to be okay. I think watching inflation is going to be important this year. And then, just being conservative on the deals that you engage in, invest in. If you have capital, just don't be a fool. I mean, you got to be smart how you allocate your money.
Yeah, absolutely. I couldn't agree more there. A lot of really, really great points. We're getting into that time when, being conservative is important. So along those lines, what are some of those conservative metrics you like to see in a sponsor's underwriting that, you makes you guys feel confident doing a deal with them?
Yeah, that's a great question. Because we see everything. Like the biggest thing, I think, obviously experience is important. Track record. For me personally, it's liquidity. I get a lot of people, a lot of loan requests from people that they want to do these massive deals, but then they don't really have the capital to do it. And and so from a lending side, like if you're asking to do like a $10 million loan and you have 200,000 in the bank, it makes it very difficult to make a credit decision on that, because the payments on just the loan itself are 80 grand a month. So it's like, well, how can you sustain if we go into a recession to repay my loan, even if I'm at 60% loan to value or whatever? So liquidity is very important to me. I mean, I like to see that there's, good money in the bank. Reserves are important. Credit score is not as big of a driver for me because I think credit scores can be manipulated. But obviously the person has decent credit. Debt ratio, obviously, not being levered up. There's a lot of investors out there, man. They're deal junkies, and they want to get their hands on the next deal, the next deal, the next deal, and then it's crazy. I have some of my clients, man, they can't stop getting new deals in, but then their liquidity is like, they don't have liquidity. It's like, man, you can't keep doing all these deals, man. So that's important. Debt ratio. Obviously, that you're picking things in good locations. You have some investors, they target troubled assets, and they come in and they'll do remodels, rehabs. Like the hospital deal that I was working on, he's getting it for 50 million. The hospitals are worth 120 million. And so, but they need like 18 million of rehab. So knowing your market, the investor that knows his market very well, he's not trying to be all over the place doing construction and doing, buying, troubled assets. You really, really have to know and have the team, have the infrastructure around you, to be able to do that is very, very important.
Absolutely. Yeah, that's it's extremely important, especially when you get up and, like you mentioned, these larger deals, of course. So I guess the question here would be, with everything being so intense over the last, in terms of being very, very bull market over the last, let's just say 3 years, was there a little more leniency in terms of track record and things like that are tightening now, or were you always like pretty strict, like these are the standards?
It depends. So like, for example, it depends on the product that we're doing. Like so with our company, we do private and hard money. That's one division. And that's obviously more asset-based lending. And that's reflective in the terms, right? A hard money loan can have a 12% rate, but it's not really looking at things as more stringent versus a bank loan or a commercial loan or an agency loan. So we would have to look at a file and say, okay, he doesn't meet the liquidity requirements for a bank loan, but maybe we can put him on a hard money loan and reduce the LTV. So we like that because we have different options. We never want to turn someone down if we don't have to for a loan. I mean, we want to try and figure out how to make it work. I have a guy doing a $7 million deal in Fort Lauderdale, and he only has $1 million to put down. I know you say only $1 million, but it's a $7 million project, and he's building condos, and every other lender is like, no, we don't want to do it, but he owns the land free and clear. So we're trying to figure out how to approve that loan on the hard money side, because he can't really he doesn't really qualify for a commercial bank loan because of the lack of liquidity. So we're gonna most likely do that loan on the hard money side and then take him out with a bank loan once he's done with the construction, and so we like to use bridge loans a lot, come in, offer, the capital, and then come out with a takeout loan for a perm loan with a commercial bank loan. So, I would say that just because it was a bull market, we didn't really close our eyes. We would try to find alternative products. We love asset-based lending too. It does make a lot of sense in certain cases. So that's the cool thing about our company. We can kind of toggle between the two in situations like this.
Absolutely. Yeah, that's really great. As you mentioned before, and kind of right there, just that creativity, being able to say, okay, well, bank loan doesn't really work here, but we've got this other side. So with that, with new operators and that getting into these deals and wanting to get into it, what are some things, some loan types and different things that they can look at and stuff that they should have prepared to make it easy as possible to get loans? and be able to do deals without, necessarily having the track record?
Yeah, I mean, the thing that that's a great question, Jonathan. The thing that you know, usually so if somebody's new and they want to get into the space, and I know that a lot of people, they say always go big. I think there's a few things you can do. You can either build your way up in kind of a ladder position, starting with smaller projects, starting with a track record, or partnerships. Usually, and I know a lot of people say partnerships don't work, but I think the right partnerships do work. If you can partner up with someone that has the experience, if you want to do bigger deals, you have some. I know that there's a lot of people in our space that say only do 100 unit plus, don't ever do a 10 unit or 5 unit. And I'm like, well, I don't know if that's really true, because sometimes you can learn a lot by doing like a 4 unit or a 5 unit and just learning the experience of it and kind of building your REO. I think either doing that and kind of you get the experience, you learn how it works, you find out who the good property managers are, going to these REO events, meeting other people, networking, and then getting into partnerships are great. I have a lot of partners that I work with, and I wouldn't be where I was today if I didn't have those partnerships. But I think it's, networking with the right people is very powerful, but you also have to add value too. So I think doing that, and then, you see a lot of syndications now, where you see these, whether it's a REIT or, investment firm, private equity, where they pool capital together. And when they go to get a loan, it makes more sense because there's a strong sponsor in there that has experience, and the whole deal, just kind of comes together. So that's what I'd be focusing on if I was new in the space, is, starting out smaller projects, building a network, and then trying to add as much value to your network as you can, and then trying to scale that. And because that's the thing, everybody wants to be, the next Jonathan Cattani, and it takes time to do that, and I think a lot of people, I don't know how many calls you get or emails and stuff. You have a lot of people that are dreamers, and there's nothing wrong with being a dreamer, but you also have to back it with realistic things. And we get calls like, daily. I want to buy a $20 million property. I'm like, well, how much do you have? Well, I got 10 grand. You ain't doing that, man. There's no lender in the world that's going to fund that. So you got to be realistic about, what you're trying to do, especially in lending is very realistic. There's no magic or myth or, some potion that's going to come grant the approval and fund that loan. So I think those are some of the key things, in my opinion, if you want to try to really be a long-term investor in this game.
Awesome. Yeah. Thank you for sharing that. A lot of great points there. Biggest one being the partner, for sure. That's the biggest thing that I see is getting with someone who has the track record and the experience, because it's just going to make things a lot smoother. They understand the loan process, especially because that is, can be very difficult to learn and understand. And a lot of stuff goes into it that you don't really realize till you're part of it.
Right.
So kind of with that, what are some of the misconceptions that people have when it comes to these loans and things like that?
Yeah, I think that people, the timeline, some people think that they're just going to get approved and funded like in a few days. Loans, can take 30 days, 60 days, 90 days. The questions that come up, as far as sourcing things like, funds for closing, going through tax, and the type of loan they're doing, the tax returns. Why did you deduct this? What did you put on your tax? This thing, your credit, going through your credit. Some people take it personal when lenders start asking the questions. It's not a personal thing. There's certain things that they need to know about. So, I think that those are some of the main things, is having the right, I'm so big about setting the right expectation with the client. And I think that a lot of clients, if they're not used to it, they get inundated and overwhelmed with the process. and whether, even if it's just a home loan, the questions that come up, the things that are needed, the documentation. A lot of people, they'll get bogged down by the documentation request and they'll just throw in the towel. And so having the right expectations, knowing that you're going to need all this information because you're asking to borrow money. It's usually large sums of money. You have to have the mindset. If you're going to fight the stream that's not going to work, and you start fighting with your lender, you're going to have a submissive attitude and get them what they want, because the faster you get them what they want, they can get you funded and get you onto your deal. And that's really the most important thing, I think, and that I learned, because when I first started the business, I was kind of surprised too about the stuff I was trained and taught to ask people. And so I think that's important. Get ready. You're gonna go 12 rounds with your lender, but it's all for the purpose of getting you funded.
Yeah, that was a really great point there about having everything ready, because, again, you talked about how long some of these loans can take, and, people get frustrated, but ultimately part of that length is determined by you and how easily, how quickly you can gather the information. So, it's a bit of a catch-22, but it's very important. And again, goes back to, if you're new, getting an experienced partner who understands all of this, because things are just going to move quicker.
Right.
So obviously throughout the years, seen a lot of legislation. '08 brought about a ton in terms of lending. We've seen a little bit more since then as well. Is there anything you're keeping an eye on, that may potentially come to light in terms of legislation?
Well, in regards to a commercial lending?
Yeah, just lending. Yeah. Or in general, like, is there anything that, there may try to change again, or?
The residential lending is a lot different than commercial lending. So the residential lending is always changing a lot, but on the commercial side, despite the Federal Reserve and what they're doing with the interest rates, the only thing that in regards to regulation, I think that we need to keep an eye on is if they change any of from the banking side. They have banks that have certain requirements for making those loans, the loan limits, the reserve requirements that the banks have to have set aside. For example, if I want to make a $3 million loan to you, I can't make another $3 million loan to you because I'm too concentrated with your company. So, and if I do make a $3 million loan to you, I have to have at least 33% liquidity and a reserve set aside to make that loan to you. So I think that from what I'm seeing from the banking side, what the FDIC and the OCC has passed on to the banks is more scrutiny. And I think that, I understand the reason why it's there, especially with rising property values. But there's times when it could make sense to make another loan to you, especially if I had the capital set aside. So what you're going to see, or what's been proposed in legislation, is that if I decide to make another loan to your firm, then it would double my capital requirement to make that loan to you. And that would put a lot of pressure on small regional banks and credit unions, because they are not in position, if they were to make those loans to their customers, to be able to set aside that much capital. So I think the question is, where are those small businesses going to get their loan from? Are they going to have to go to the capital markets to get funding? Because you're going to want to keep doing deals. And what will end up happening is that you either have to set up multiple relationships with other banks, because the one bank that you have your SBA loan with is like, well, I already made an SBA loan to you. I can't do another one for you because the capital requirements for my company are going to be too high. so you run into all these other issues that can happen from that. So I am concerned about that if that goes into effect next year.
Interesting. Okay, that's good to know, and something to keep an eye on, which I guess goes back to, having relationships with various lenders and things like that. And
But private lending, yeah. So I think private lending. So one of the things that I think that, and I can, it's evidence that private lenders will emerge more and more on the residential and commercial side, because they're not bound and regulated by the same body as commercial banks are. And so, because for example, let's say that you try to get another SBA loan, like, no, you already have one, I can't make another one. Well, you want to do this storage deal. Okay, I might pay another point interest, but at least you're going to get my deal funded for me, because the investors they do look at the cost of the loan, but they're also looking at the total ROI. I have real estate investors that make millions of dollars a year, and they pay 12 points, and they don't care, because they're, like the guy that in Dallas, he made $2 million on a flip on an apartment complex. He doesn't care. He needs to close in 10 days. He doesn't need a lender asking him a million things in 90-day closings. So, so you have situations where I got to do this right now. I don't care, because if I paid $100,000 in fees, I'm looking at the bigger picture. So private lending I think is always great, because it gives the investor more solutions.
Awesome. Yeah, that's a really great point. I didn't even actually think about that perspective, but now that you mentioned, I am starting to see more private lending starting to come out. You're starting to see funds, investors who have the extra money, just due to, kind of what you're saying, more people wanting to get into this, which means more new people, which means, probably needing private lending to start. So just kind of a snowball effect. So you're starting to see that a lot. So awesome. Well, I appreciate all the insight. We are kind of coming up on time here. So I'll get to my final 5, which are the same 5 questions I asked all of my guests. The first one is, what's the best advice you've gotten from a mentor?
Best advice is, it's a great question. Man, that's, I would say that really take the time to figure out what you want to do on this earth, and don't make rash decisions. Don't get caught with trying to make a living instead of designing a life, and really try to figure out, find out who you are, and then go for it. I think that's so important. I think so many people, they don't know who they are or what they're doing here on this earth. And once you do that, then focus with precision on that one thing. I think so many people, they want to jump all over the place, and I'm guilty of that too. And you can't be in all the industries. Okay, you can do one thing really good, and like Ray Dalio, he says you can have anything that you want, but you can't have everything. So I think that's a very important lesson.
Absolutely. Yeah, that's really great insight. What is it about your career that makes you feel like you're fulfilling your why?
So that's a great question. The giving back, I think that, like Maslow's hierarchy, after you figure out how to take care of yourself, is the transformation for me. Like, for example, if I make a loan to your company and your company grows and you provide jobs to people, it's the transformation, changing your company, changing your employees' lives, changing my employees' lives. So adding value, the transformation. I have so many employees that work for me, and I've seen them buy homes, buy cars, make a family. And for me, that's very powerful. So it's a spiritual thing. It goes beyond any economic stuff. It's spiritual. So the transformation, is the most important thing to me. That fulfills my why.
Awesome. Yeah, it's so true. Once you can give back, it's just such a fulfilling thing. Favorite non-real estate or investment related book?
Favorite non-real estate? So let's see. So non-real estate investment book. There's a few of them that I really like a lot. Let me think about that for a second. Non-real estate investment book. Think and Grow Rich is got to be one of my top favorites. That book, man, I must have read that 10 times. The Unlimited Power by Tony Robbins, phenomenal book, very powerful. Unlimited Power. Those are probably two of my the two books that changed my life when I read it as a teenager.
Awesome. That's great. Yeah, two great books. Think and Grow Rich is definitely a very popular one. A lot of people latch onto that. If you could have any superpower, what would it be?
Superpower. My favorite Avengers is Incredible Hulk. I don't know how you would translate that. I mean, I don't know. It's I think that I love courage, and being if I could be the Incredible Hulk, the fearless. I mean, I don't know what is his power? Almighty strength. I mean,
yeah, probably just like superhuman strength, I would imagine.
Yeah, it's because he's not afraid of anything. He'll run through a wall.
Right.
So he's my favorite Avenger, man. I don't know if that answers your question. So
absolutely, I love it. Awesome. And last one, what's the best way for people to get a hold of you and learn more?
Yeah. So we have our, obviously we have a social media following. We have a podcast. You can reach us on YouTube. YouTube is a great one. Angelo Christian Mortgage. Our website is official Angelo Christian. We're open 7 days a week. You can call or text us. We're a nationwide lender. You can call or text us at 832-431-6331.
Awesome. We will link that in the show notes. Angelo, thank you so much for all of your insight and all of your time.
Thank you, Jonathan. We appreciate you, man. Thank you, brother.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.